Let's move on and actually pull up the stock price of Raymond and what is that doing in trade. They reported their numbers as well. And on the back of their numbers, today we're seeing a bit of a muted day coming in for Raymond as well. We are joined now by Mr. Amit Agarwal, Group CFO at Raymond. Thank you so much, Mr. Agarwal, for joining in with us this afternoon on ET Now. I want to let's talk about the numbers because in an otherwise very muted customer demand environment and delayed festive season, you managed to deliver your highest ever revenue and EBITDA. Could you help us understand what's actually driving this growth and what is the trajectory in terms of the top line growth we should expect from the company in FY24 then?
I think it is very important to understand that Raymond, which is very innovative company, keeps innovating its product design, and that helps us to get into the market with our newer products. What we have done in terms of the premiumization and casualization, and especially if you look at it, our branded apparel segment, where we have demonstrated a significant growth over last year to the tune of 18%. I think that is one very clear reflection that as a player, we have been able to bring new designs, premiumization, as well as if you see, we have opened new stores. And I think if we continue to open the new stores, that helps us in order to also get the penetration into the deeper into the market, which enables us to get into far higher revenue. Second thing, the whole important factor is that as soon as the whole Adhik Mas got ended and Pitru Paksh got ended, there was a big frenzy of activity which our dealers and franchisees were expecting very, very clearly. And that is why they had started to buy from us, because on the fabric side, we sell primary and to these dealers and franchisees, which helped in this business to get to the highest revenue. And let me also talk about the real estate business. We launched the second tower, the Address by GS Season 2 in the month of July. And on day one, we got 50 bookings for that apartments out of total of 200. So I think in this quarter also, we have seen a very, very strong growth in terms of our bookings. So I think overall, we are quite satisfied that the performance level, the revenues across our all businesses have done fairly well.
Right. Good afternoon, Mr. Agarwal. This is Cheryl also joining in the conversation and talk about the festive season. It is underway, and also you'll have the wedding season that will be soon upon us. How has the weak demand sentiment been? Have you seen some sort of a reversal in the weak demand sentiment that we were witnessing? And also after record FY23, are you on track for a record FY24?
I think it is, we believe that at Raymond is first you demonstrate and then you talk about. And actually, very clearly, if you see once again this quarter delivering a record performance reflects that the ability of the company across all our businesses is to boost growth, both in terms of revenue and profitability. Look, in terms of our demand for the products, especially on the weekends, we have seen even the last weekend and the weekend before that, the sales have jumped up. If I take weekend to weekend, we have been tracking for the last 4 to 6 weeks. If you look the numbers, what used to be a growth seeing 30-35% over the weekend from one weekend to another weekend in the initial phase. So I think now we are seeing, like last weekend, we got a record sales in our TRS stores. I think that reflects there is a significant push in the market and the customers are willing to come forward and buy the products. And very clearly, the mood is such that the 8-9 months, people have been shying away from the retail market. Now they're coming into the retail market. The trigger is clearly the festival season and the wedding season. And you see the number of weddings which we are expecting is also phenomenal in this short period of 23-24 days. I think that buying has already started because first it was the puja shopping and then reflected with little bit of Diwali shopping coupled with the wedding shopping. So I think we are seeing the traction across our stores.
Right. There's one thing that is coming out in your margins, especially when you look at your margins, excluding the other income. They come in, seems like they've come in under pressure. So what is it that is impacting the margins and what is the outlook on the margins now going forward?
So look, in terms of the margin, I think it is not that there is under pressure because what happens as we will have proportion of the branded apparels and the garmenting segment, which is the export-led segment, which is going to grow. And we are on a build phase. We have to also understand, as we continue to open the stores all across the country for the retail footprint expansion, we don't take on our own. It is all franchisee-led. However, you need to put expenditure in terms of doing the retail marketing in that area. So that puts up the expenditure. You're putting more money on the branding. Second thing, in terms of the garmenting facility, if you look at it, what has happened that, as we have told you last time, that we are putting almost 19 lines, additional lines with a 200 crore of capex. We need to train our workforce. So at this juncture, we are training the workforce, which the cost goes into the P&L, but the output will come little later. The third thing, on the real estate side, if you see, there's a margin reduction in the margin compared to the last year, because if you launch a project, you will have initially a lot of expenditure, marketing expenditure, in terms of putting the approval, some of the approval cost, which is like a one-time cost, which goes into the P&L. So those kind of cost hits when you launch a project. And as I mentioned, that in the month of July, we launched the project. So over the time, we are very clear that our demonstrated performance on the real estate side is in that 24-25%. However, in this quarter, because of the launch of the projects, the margin is lower. So on an average, these are the two major reasons which has led to a lower margin. But we are very confident that the circa 15% margin overall for the EBITDA for the business will be continued to manage and maintain that.
Right, Mr. Agarwal, you are evaluating various JVs as well as JDAs. That's the last time when we spoke to you. And indeed, since then, you have actually announced projects outside Thane. If you could tell us what's the combined top-line potential of these projects, including your launches that you're seeing in Thane?
You see, is we have launched almost 4.5 million square feet in Thane, and we have delivered almost 1 million square feet. So to that extent, it is a potential to the tune of 9,000 crore. It is current revenue from these projects is 9,000 crore. We still have almost 60 acres of land, which has a 16,000 crore of potential. So Thane alone would be a 25,000 crore potential. Now, as you rightly pointed out, that we have started to venture out on the JDA project. One we signed in the Bandra. The second one we have signed in the Mahim very recently, I think 10 days back. It is the Mahim project. So between these two projects, the projected revenue is somewhere in the range of 3,800 crores. And as we continue our journey, we have outlined again as a strategy that our target is that in the next 3 to 4 years, almost 40 to 50% of the revenue can come from Thane, 40 to 50% come from JDA projects, and the balance would come from Thane projects. So I think that is a whole strategy. We are working towards that. And you have seen that slowly and steadily we are progressing towards that. As we speak currently, if you take 9,000 current revenue potential and 3,700 crore from the two JDAs, we are closely reaching to those numbers.
Okay, thank you so much, Mr. Agarwal, for joining with us this afternoon on ET Now and talking about the company and a growth outlook for the company going forward.